Doing a quick live just to go over a few things, especially on the subject of how to scale your company fast, profitably, and with minimal risk. And the way to do this is by really getting to grips with your numbers, understanding your numbers, and not getting drowned in a sea of data. Most people just really don't understand the numbers. So hopefully you'll be able to learn something from this presentation. So let's get started. First of all, who am I? I'm a chartered accountant, trained at Deloitte, worked for 20 years as a corporate accountant, and worked as a full-time CFO for two companies, one with 31 million pounds turnover in today's money, and another with 56 million pounds annual turnover in today's money. And now I'm helping smaller companies, mainly with 1 million plus turnover. I can sort of help companies of any size, but I find those are the ones really that are a good match for me. And so I call myself a fractional CFO. Some of you may have heard of the term, some of you may not have heard of it, but basically it's a part-time or portfolio CFO. So the idea is you can start small with one service, one package, and then as your company grows, you can get more and more of my time. But the idea is that it's obviously affordable to get someone at my level for a short period of time or fixed deliverable rather than employing me or someone full-time. So as you can see, I've been on TV about 6 or 7 times as an expert, mainly Sky Business News, but once on BBC. So what exactly is a fractional CFO? So we help you increase profits so that you can increase your impact. And we do this by helping with the numbers, with the financial stuff like strategies, budgets, projections, KPIs, metrics, the sort of thing most people are a little bit aware of, but most business owners are really just focusing on providing the service, managing their business, and they don't get too involved in this. So it's good to have someone who can do this and give you the information you need. And obviously, if you track the numbers properly, the idea is to reduce debt, increase cash, and ultimately build wealth. So why are some companies winning and some are struggling? What they're doing differently? A big thing is really motivation. It's working out what you really want in life and then just sort of fitting everything around it so everything is truly aligned and you're really putting all your energy into it. It's when these sort of things get out of kilter and that you're just sort of going through the motions or you're acting out of fear or scarcity and stuff like that, then not only do you not enjoy it, but often you make bad decisions and you end up failing. So it's important to have a visionary mindset. You won't be very successful if you're in scarcity mode and just sucked into doom and gloom all the time. So I think in terms of decades, not days. Now, of course, you have to be practical as well, which is why you need to basically know your numbers and be data driven. But as well as that, you need a visionary mindset and what I call empowered evaluation. So obviously what we've done in the past has been sufficient to get you to this point, but then you've got to think what's the next level, how to get up there. So the answer is to make data-driven decisions based on your numbers. So here are 4 metrics that are absolutely critical. Obviously, revenue, aka turnover. Most people are too obsessed with that, and that's all they focus on. But of course, the gross profit is ultimately more important. There's no use cutting your costs, cutting your prices to boost your turnover. Oh, I've got a high turnover, but I've cut my prices so much it's eaten into my gross profit. And same thing with expenses. You know, you're having loads of gross profit. If you have masses of expenses that eat it all up, and you end up with very little or no net profit. So these 3 metrics are from the P&L are extremely important to track and set forecasts and budgets and so on, and compare your actuals against. And of course, then we have cash, which is from the balance sheet, but cash is basically, the proof of the pudding is in the cash. It's no use making loads of profit if it's all tied up somewhere and you can't get your hold of the cash, you can't pay your bills, and you're going to that's how companies end up going into liquidation or administration when they run out of cash. So cash is ultimately the most important, but the other three metrics are also important as the way of understanding cash flows in the future. So in terms of financial statements, big three: profit and loss, balance sheet, which most commonly people know about. There's also a cash flow statement, which shows the cash in and out, which is also, it's the same data, it's just presented really in a different way. And what to look for, basically you have to understand profits and cash. You've got to really get down into the detail and understand which parts of your business are profitable and which aren't, because most people just look at the big figure, the whole thing. Sometimes they look at the whole thing several months later because their bank account isn't reconciled. So most people are really out of touch with with what's going on in the company. But you need to have both a global vision and also a detailed vision, so you can see maybe you're more profitable if you shut down one service, one product, one cost center, one member of staff, whatever. If you shut that down and you put more resources into something else, so you need to know the impact everything has. So obviously it takes years in anything to really reach expertise, so you don't need to be the expert at everything yourself. Obviously it's important to be as aware and focused as you can easily, but obviously you're probably very busy and have got lots of other things you need to do as well. So you do have to understand the general story and make smarter decisions. So in terms of projections, obviously forward-looking P&L is very important, and you have to understand the outcomes before you make decisions. And the way you do that is to do what-if scenarios. So if I take this course of action, what effect will that have on my P&L and ultimately my cash in 3 months, 6 months, 12 months? Or if I take this decision instead, what impact will that have? So you need financial modeling to do that. In the past, that was always done with Excel, which is the way I used to do it. But now we have software that makes this easier and more accurate as well. The software I use is called Futurely. So the number one tool winning CEOs have is projections. And then so they make a projection and then they track the actual figures against this, then they learn. I mean, was the projection wrong, or are we able to do better than that? Are the assumptions we used in the projection, were they wrong in some way? Or maybe the assumptions were over optimistic. Maybe reality hasn't lived up to that. If so, can we try and find out what the reason is and hold whatever accountable or change in the future? So it opens up a whole avenue of ways you or we can explore to try and make better decisions, better projections in the future. So this is an example of the sort of things we do. So this is a cash flow forecast, a rolling 12 months, showing the cash figure. This is fairly healthy, 200,000 cash, and also shows the sales, expenses and cost of sales every month projection. And then also you can have a P&L forecast by month. You could either have a rolling one like that, or you could have maybe once a year or twice a year create a budget sort of set in stone, and then just track everything against that, just to give you insights how you are actually doing against what you thought you were going to do. And then it's numbers are okay, but it's really when you have graphs and images like that that really bring things alive. Hang on a second, I'm just checking my checking my data to make sure it's everything is sharing okay. Let's check my LinkedIn. Yeah, it's all good. I've got one like and on LinkedIn and 118 views. So thank you for watching. But this is actually the important bit. So carry on watching. So I'm going to talk you through some of these graphs. So these are graphs. This is a health check. So these are sort of things that I would produce every month for my clients. So this shows actual against prior year. So this is so we don't even need a budget for this. And it's just a way of showing it by quarter in that case. So that's the income, GP, and the operating profit, and then splitting it down by different categories and so on. And I think it really helps when you have a graph like that. You can really see how big that account is compared with the others. You can see it viscerally that way, but here with a load of numbers, 57%, it doesn't really it doesn't really help you really understand what's going on as much. So here is an example where we have a budget. So you're just basically paying the actual against the budget last month with the same month last year and last month against the budget. And these type of graphs and also pie charts are very good. So this shows the different departments of the sales against the budgeted figure. And then, of course, expenses. And this is really good. And one of my clients was really actually blown away by this because he didn't realize how much he was really spending on staff costs until he saw this. And he saw like half his expenses was going on staff. And he realized that was really the area he needed to focus on reducing. And P&L data, cash flow, income, net profit. When you see it by month like that, it's quite useful because you can think, well, why is it? Why did that fall that month? And then you can investigate and find out. Now, also balance sheet ratios are very important because not only is your cash in your balance sheet, also your debtors and creditors are there. And you know your creditors you will have to pay at some point, and your debtors, you need to get them to pay you. So it's crucial to be aware of how all these things are doing. And one way of doing that is by using these ratios, like the cash ratio, idea of how its ability to pay back its short-term liabilities, its debt. So comparing cash against debt, and the current ratio of comparing debtors and creditors and so on, and compare the debt to your equity. Return on assets, very important, because if your return is very low, in this case it's 1%, well, you might think, well, you'll be better off just putting your money in the bank maybe, or finding some other use for it. So obviously always looking at trying to get this as high as possible. Tax planning is another thing that's very important. Most people don't really think very much this, but there's various things you can do. EMI schemes. One of my clients is doing this at the moment, setting up share options for their staff. It's very, very tax efficient, and it builds in a lot of loyalty with the staff. And extracting wealth into a SAS pension. It's another thing most people don't do, but SAS pensions are fantastic. They're very flexible. You can invest in property, subject to all the rules and everything, commercial property, but you can get hold of your money at age 55. And also, of course, you might start planning for inheritance tax with a discretionary trust. Alphabet shares are fantastic, especially if you have various directors you want to, or family members you want to pass dividends to in an effective way, or setting up a group structure so you can use group relief to pass tax losses and or cash around the group tax efficiently. And just, also rethink expenses. It's not always good to just cut expenses continually down to nothing. Some money out is actually a good thing, and I'd say money invested in your fractional CFO to get data-driven decisions, I'd consider that more as an investment actually than an expense. So success isn't necessarily given to those who spend less. It's really about spending smarter. So there are more millionaires and billionaires minted during economic downturns than any other time in history. Now, I don't actually know if that's true. I've heard it said. I don't know who said it or what evidence there is for it, but if there's not more, at least there's still a lot. I know for a fact there's still a lot of millionaires and billionaires made during downturns, and it is a fantastic opportunity for many people. So are you prepared to be the next one? So one thing I can offer, if you have, if your company has £1 million turnover or more, you can choose to just do nothing, carry on as usual, or you can get in touch with me at redboxfinancial.com for a free financial health check, where I can try and dive into some of these numbers and ratios for you and go over with you how I believe your company is doing at the moment and how it will do in the future. So I hope you found that interesting. Please put whatever platform you're watching this on. I'm showing it to I'm streaming it to quite a few platforms at the moment. Please make a comment. Let me know how you're doing. Let me know if you've got any questions. And apart from that, well, it's been great to stream to you. This is my first actual stream for some time. And I hope to be doing a lot more of them. Just checking any posts. Thank you, Donna, for commenting. Letting me know that you're watching this on LinkedIn and thanking me. It's been a pleasure, and hopefully see you again soon. That's all for now. Bye.